Hello, good morning. It's a real pleasure to be here, and thank you very much, David, for the nice introduction. I'm particularly pleased to see quite a few, not only of investors and LP, but also fund managers. I will have the opportunity to speak to some of you and my colleagues as well. I was asked to give you today a little perspective of how the European Investment Fund sees the venture capital landscape and the evolution. And I will do this not just by sharing with you my own perception, but telling you more about the feedback we are getting from our fund managers, of which we have more than 1,000. And fresh from a survey, I will share with you also the feedback we are getting and the perspective that the fund managers have. Let me start maybe with the first slide and give you a little introduction of the EIF. I'll be short on that one. So we are an EU body, meaning that we have as shareholders the EIB, European Union represented to the Commission, and then we have 38 banks, private and public. We have a public mission that's obviously to focus on small businesses, SMEs, to use the EU jargon, and we, beyond that, focus very much on policy priorities. Policy priorities, I will mention them. It's like competitiveness, innovation, social skills, culture, climate action, environmental sustainability, and cohesion across the EU. So we are very much present in two areas, debt finance with guarantees, but also in equity, where we are present in more than 1,000 funds. We have currently a cruising speed of 3.5 billion of investments a year. Totally, we invested so far around 35 billion, and we plan to double our investment speed going ahead in the next 2 years. So we see a lot of needs in the equity space as limited partner. And our approach is not to invest directly in companies, but to invest in funds. So it's a delegated model where we partner with other LPs, and we try, also first-time teams, to structure their funds. And we are present throughout the value chain. So we are not only in the early stage, starting with business angel, seed, pre-seed, startup, but we have a whole range of instruments and products that allow us to provide the support that is needed at any moment in time to small and medium-sized companies, and also to accompany them on their journey to become unicorns, so bigger than SMEs. Now, a little word on where we are and what we try to do. We are not automatically investing in all areas. We are investing if we see there's a market failure, or if the private sector investments are not sufficient. So we are not crowding out private investors. However, very often, we see that it's very important to be there as the first investor, to be catalytic, or to help with establishing best market practices, or to be in areas which are perceived to be very risky, like first-time teams. In doing that, we look, of course, at the added value we can bring. And some of it is indeed additional tickets. Some of it is helping to set up and structure a fund. Some of it is to connect companies with potential second-round investors, but also building up an ecosystem. So that is where we are. Of course, we measure the success looking at the companies that are still active. We are around 9,000 active portfolio companies now. Not only startups, but also growth companies. And in total, currently in our portfolio, we have 175 unicorns. You only see a few of them here on this slide, so there are many more. Of course, that is very important for us, because these are very often also the drivers of the industry, not only of today, but also of tomorrow. Now, a little word on how we see the developments, and that is not only my own view. Of course, there are big challenges. You have heard certainly a lot about it. There are macroeconomic challenges, geopolitical challenges, also financial. It's clear that we see the effects, not only of COVID, but also of the disruption of supply chain. We see certainly inflation, the impact it has, potentially recession in certain countries. And financially, it's also clear through the valuations, where we see a decrease in valuations. I'll come back to it. There are always two sides to the coin. And what we are looking at is what we can do about it. But first, let me give you the perspective that we have heard from our fund managers, with whom we are in regular contact. So again, more than 1,000 of them. And of course, we are very much on the ground, talking to the fund managers, going to the advisory committees, and getting their feedback. But we have also another mechanism to have information from the horse's mouth, that's surveys. We do every year a survey. And this year we got responses from 440 fund managers, and I will share with you the main conclusions. There are 3 of them. What we see overall is not a complete depression or a problem with venture capital. What we see is indeed a decrease in more challenges in the fundraising. So we have more pleas from fund managers to us to come in, also with bigger tickets compared to last year. Now, last year, I must say, was a bit exceptional. The year 2020 and 21, we had never witnessed such a thriving market and such high valuations, and it can, of course, not last. Then we also hear that there are, and we see it, it starts to show, but not in a big style, that there are more problems in the exits. We still have positive exits, but it's slowing down. Now, another feedback, and that is very important from a European perspective, and after all, we are a European body, is that we see that more and more exits are not made with European investors, but with foreign investors. And very often that translates into a change of the seat of the investee companies, that they go then to America, China. Nothing wrong with that, certainly from the side of the companies. However, it shows that we have a problem, which I will address later, in terms of scale-up finance here in Europe. And so there is something where we need to do something about it, that we also continue to reap the benefits of the higher risk investments we made in earlier stages. Now, coming to the positive side, in every crisis there is also a positive side. Let me say also a few words on how we perceive it. Currently, indeed, we see the beginning of a slowdown, and the macroeconomic and political situation has an impact, obviously, on the venture capital. But it's in a certain way also a correction. It's a correction after 2 exceptional years where we saw paper value under the various accounting standards going through the roof. But I think we have now a more realistic valuation also. And it can create also opportunities for LPs to have a more reasonable valuations to enter and support. I think also that the market itself has evolved over time, and I think back at the last crisis, VC was not as resilient. We have a more mature ecosystem now, and we have relatively well weathered the storm of COVID. So I think there is a change compared to 10 or 20 years ago, with a more thriving ecosystem, more actors in it, also more resilient and more professional, and I think that pays off. There are also opportunities, and you see some of them. That's what we hear from our fund managers, where they see the opportunities of tomorrow. Healthcare, energy, top, but many other also areas, biotech, agri-tech, I will come to. Now, interestingly enough, some of these highlighted areas correspond precisely to the EU policy priorities, and particularly in terms of strategic autonomy. Now, let me say also how, as an LP, we could maybe do something about it together, of course, not the EIF in isolation. And I will start with the topic of green and digital. Obviously, very much at the center currently of all the political debate. It's also a priority for the EIB Group, EIB and EIF, and for many other actors. It goes into the direction of what I would call support still to generalist funds, but more and more to areas, thematic priorities. And there are many of them. They are categorized. The EU has certainly a clear view on them, and I will mention a few of them, and obviously we need to be there. We need to be there because it's also market opportunities in our perspective. We are already present, and we want to do more in the area certainly of green and digital, but not only. Now, the second point is innovation. Innovation is a broad term. We see it in a number of big areas where we are already present. I say it's certainly more than half of our funds. But we see on the one hand the disruptive technologies, the deep tech, the AI machine learning. We also have a broad strand, and I would group in that the life sciences, health, but also biotech, foodtech, agritech. So it's another thematic big cluster. A third one is in the area of energy. You saw it before, clean tech, green tech, environment, circular economy. And the last one is semiconductors, the chips, and the nanomaterials. So these are the areas where we are very much present. And why? Because we consider that they are crucial for the economies of the future. So this brings me to the next point, and it's the point about strategic autonomy. I referred to it before. You will hear it a lot in policy documents nowadays. It's about being less dependent on other countries. We have seen it now, I think, throughout the supply chains. But also, we don't want Europe to stay third league. We want Europe to maintain a leading position in a number of key areas that are crucial for our future, and we will certainly invest in those areas. One of the problems I referred to was the scale-up gap. We have done a lot. We have come a long way. We had many problems in the early stage. I wouldn't say it's perfect. It's much better, but it's important also to create an exit environment for the funds who have taken that risk and to go into the growth area. And I'm talking about buy and build, but I'm talking about bringing companies to pre-IPO and even post-IPO. There are a number of initiatives in that stage from the EU, but there are also crucially initiatives that are supported by member states. 22 member states have signed up to the policy idea. We are in the fundraising mode now with a target initially of 3.5 billion. Will probably be bigger in a later stage. A number of member states have already signed up, and our idea is to leverage these amounts by sharing with other private and public investors with a multiple of 5 times. So this will be big amounts, and the idea is to invest bigger tickets into companies through funds, again, fund-of-fund model, so that they have an alternative to stay in Europe also and to grow here. Now, it's very different things, qualitative. What we see is certainly in our portfolio companies, but also in the funds, a rather male-dominated venture capital scene, roughly 85% led by men. I think there's value to raise awareness. It will be a journey, but to bring in more women, both at the level of the funds, but also at the level of the entrepreneurs. For this, we need to create not coercion, but incentives. We are working on it with like-minded actors in the national promotional institutions, with whom we have, I think, 49 partnerships. And we are working on a gender-smart investment scheme that we will launch very shortly, together with them. Now, finally, it's not only about money. As we are moving into areas that are less familiar, where we are all on the learning curve, and let's be clear on the green, the 50 shades of green we may have, what is taxonomy compliant, you need to have capacity building. You need to have advisory services. You need to create a whole ecosystem around it. And we are working a lot together with the EIB, the European Commission, but also with like-minded national promotional institutions on providing not only finance, but a whole accompanying a range of services and helping the funds to work on the SDG, the ESG. So it's not black and white. We will not filter out funds, but we will work with LPs, because this is like-minded, to make sure that each time we go a bit further and we create a better ecosystem. Now, this brings me already to the conclusion. And I would say it's not surprising, given the macroeconomic circumstance, to have a slightly grim feeling in the market. But at the same time, as I said, I think that we are in a better position now than we were several years ago. And we have much more experience in the venture capital system. We see also serial entrepreneurs now come and create funds. We see new re-ups. We see funds indeed that have been very successful, and I believe that we have solid foundations overall, although the times are more difficult. Now, it's important, I think, at this moment that we as LPs continue to show a positive signal, that we are present, that we invest indeed in addressing the challenges, but also making sure that the money flows indeed in those companies that really need to turn very good ideas into a viable business model, but beyond that also continue to grow, create jobs, and stay here in Europe so that we reap the benefits. And I think this is something which is absolutely within reach, but we can only achieve if we work together. Thank you.